Greetings traders. Today let's discuss one important thing, that is, markets actually don't move most of the time and they actually don't do nothing. And I will show you this by giving very visible example. I will look at markets when they have made historically extreme moves and prove you that these indeed are unprecedented swings, as we could see here with S&P 500 or in Bitcoin, when we saw that greatest trends in recent memory that in fact day-to-day fluctuations of markets are really boring, and even though there have been huge swings, most of the time nothing happens. So let's start with the Bitcoin and let's see that exceptional upwards move and bear market that followed after that. So we could see that since late 2020 till like early 2021, Bitcoin raised sixfold. But if you could see here now that most of the year in 2020 it was ranging, and it only picked up at late 2020 when it went from 13,000 to like 18,000, and that was only made with like couple of days from like November till late November, like early to late November, and then it's continued ranged move. Then it breaked out from like 20,000 to 40,000. It seems like a bullet, but if you could see that there only were a couple of days when it made high moves, like two days here and then 2 days here and then 4 days there. 1, 2, 3, 4, 5, 6, 7 days, 8 days, 9 days, 10 days. Actually, whole move from 18,000 to 40,000 was made by 6 days. You see, 1, 2, 3, 4, 5, 6, 7, 9 days. But still, you got the point. The whole move was, if you exclude those days, there were no bull market at all, because if you could see that from like 18 December to like 25th of December nothing happened. Then from 27 till like 2nd of January nothing happened, and that's how markets are made. They have sharp upwards move followed by ranging market, and then when it made this breakout it actually reverted and this was actually to not a downward move but some small correction, when it still ranged up until like February, when it went at one day from 38,000 to 46,000, which is like spectacular. And then actually like it made like 1, 2, 3, 4, I would say, well, yes, like 4 days when it went to like 58,000. It was like from 46,000 to 58,000, which quickly reverted to the same like 46, 44,000, depending how they define levels. And then actually that height which was made in like April, it was actually like part of the ranging market, which made huge fluctuations from February to May 2021. This was this height, but actually you see how few days actually it took to went it there, and then for the most of the time it went nowhere. If you bought it here, you didn't even make much or lose much money. You just simply watched until May 2021, and then it took 1, 2, 3, 4, 5 days out of 1 month to fall it from 59,000 to, let's say, 30,000, and then it slowly crawled to like 29,900. So also a couple of days when it made bulk of the fall, and it's similar pattern you could see here. I wouldn't repeat myself, but I would say it took just a couple of days out of this upwards move when it actually made bulk of the gains. And the same was it high at the all-time high. It was like 2 days when it fell, it stayed there, and then it took a couple of days for it to fall back. And actually most of the fall what happened in like 2 days, in like December 3 and December 4, 2021, when it fell from 57,500 to like 41,000, which is outstanding move if you are shorting it. And the same pattern repeats everywhere here, so you could see like, yes, there is bull market from 47,000 to like 18,000, but the largest fall was in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 11 days in time of 2.5 months. This is like 11 days. Actually, every fall was made, like 90% of the fall was in 11 days out of 60. You know, this is first April, May, and then 65 days. 11 out of 65 days was bulk of the move, and then actually nothing happened for more than a year. So if markets fell on the June 15, we are almost at the same levels, and here there is like nothing interesting at all. So this pattern actually also appears in like S&P 500 as well. If we look at, for instance, one of the most spectacular falls in stock market history, we would see that actually it lasted from February 21, 2020 till like March 23, so 1 month. But out of that 1 month we had like 1, 2, 3, 4, 5, 6, 7, 8, 9, I would say 10 trading days. 10 out of 30 trading days was like entirely responsible for this move. And bear in mind, this was the greatest bull market in history of stock market. Even if you look at 2019-29 and compare this fall at start of COVID to that one, you would see that percentage drops in 1 day and absolute drops are higher here than it was there. So this was one of the most spectacular falls ever. So this is like one of the most extreme examples you could get. So, and even then, only 1/3 of the days were responsible for bulk of the fall, and it was only 1 month. And you could see like similar patterns when you could have like sharp rises, because you could see like even here you could see that there are like 50% of the days when markets are actually falling and rising, but the rise is higher than the fall. So that's one thing, but I wouldn't go here into too much of the details, so I wouldn't repeat myself. That what I was telling in previous example, because the thing is the same. You know, you could see that from like late June, some early June to like November, markets actually went also like rather flat, and there were like very small gains which were like coupled by short breakouts which were reverted with similar things. So you wouldn't make much money in either direction, even if you are doing something exceptional. And then when markets are rising, it also, the days when markets are rising and falling are almost equal. You could see from red and green dots, but the rises are more pronounced. So I don't want to just waste your time with this example. I'm just saying you that firstly, half of the time, not half, slightly less than half of the time, markets will fall, and then that will be followed by market rise if it's bull market. And most of the times the rise will be very negligible, and 3, 4 or 5% moves in either direction will be like only a couple percentages of the time. Then these will be those moves which will make bulk of the bull or bear trends, and most of the time nothing will happen, and you have to bear in mind that. So don't expect unrealistic things from the markets, because mostly nothing interesting will happen, and you don't know when those few opportunities will be. So I would say don't waste too much time behind the screen on your PC or phone, and don't listen to the news very much, because this is simply a practical example which shows that if you look at like this exceptional bull market, you could see like this isn't really interesting at all. You could see that these are moves within the expected volatilities, and half of the time it's falling, half of the time it's rising. So nothing interesting here, and that's how markets do. Good investing and good trading is boring, and don't pay attention to market fluctuations. And thanks for watching this video.